Hi, my name is Luke Holcomb with Apparatus Contractor Services, and today we're here to talk about one of the 50 rules of bookkeeping that you're likely to learn too late. And this one is, don't start a Ponzi scheme. Stay tuned for how this happens, how you may be doing this without really knowing it, and how to get out. So this is pretty straightforward, and I don't think anyone's out there arguing that you should start a Ponzi scheme with your construction company. And yet, here we are. You're running into cash flow problems, you just sold a job and you collected that deposit, and now you're tempted to take that deposit and use it to operate your business right now. Does this sound familiar? Now, this isn't technically a Ponzi scheme. A Ponzi scheme is an investment vehicle that offers high rates of return and funds their profits for existing clients with the investment of new clients. Now, you aren't doing investments, but notice the similarities. You are funding current expenses with future revenue. Part of this has to do with how revenue is classified. Quick sidebar. Using GAAP standards, which stands for Generally Accepted Accounting Principles. The revenue is only yours once the product has transferred into the control of your customer. So this is a nuanced concept, and we'll make a video about it at some point, but to keep it simple, it basically means that once you've produced the product, it's the customer's and you can recognize revenue. So if you get a deposit for 40% of the roof, technically, it should be classified as a deposit until you have 40% of the roof complete, and then it can be classified as income or revenue. Again, this is complex and nuanced, so if you have questions about a specific situation, leave a comment, drop me an email, I'll put it down there. Give us a call, something we can kind of clear up whatever's going on with you specifically. You can also talk to accountants. They should be able to clear that up for you as well. But back to our main point, this is why you shouldn't use deposits to fund your business. It's because the money isn't actually yours yet. So if someone is in this situation, two things are definitely true. One, you are in for a world of pain. I'm very sorry. It's just true. And two, you're not charging enough for your services. So world of pain. If 2008 and 2012 and all the times before that have taught us anything, it's that there are larger economic forces at play that can make life very difficult, even if you've done everything right. If you're doing this sort of thing headed into a larger economic crisis, you're unfortunately probably looking down the barrel of lawsuits, bankruptcy, and depending upon the circumstances, maybe jail time. Even without an economic crisis, if you're doing this sort of thing and your sales pipeline dries up, you're probably looking at pretty similar consequences. Now, you do not want to be living in this situation, and if you are, you're gonna have to put in some really solid work to get out of it, and you're gonna have a really high-level analysis of your company's financials, which leads us to the second thing. You aren't charging enough, and you haven't been for maybe a while. If you were charging enough, then your job costs would be easily covered. Your operating expenses, including your salary, would also easily be covered. And profit would be piling up in a bank account somewhere for you to figure out how you wanted to handle that. But these things aren't true, and so here we are. If you're in this situation, you're gonna need to take 3 actions as soon as possible. 1, you're gonna need to get on top of your finances. That's first step, all right? You need to figure out where each job is. You need to figure out how much money you've taken from future customers, and you need to figure out how much you're spending every month on operating expenses. 2, you're gonna need to come up with a plan. With this information, you should know how much you're charging with overhead. You should know how much it's gonna cost to cover your job expenses and your overhead on future projects. And you're a business, so you're gonna need profit left over. You're gonna also need to take that profit and start paying back these future revenues. And 3, you're going to have to review this on a weekly basis. You're going to need to sit down, you're going to need to look at every job that's going on, you're going to need to make sure that you're making the money that you plan to make off of that job, and you're going to need to make sure that you're taking the money that you plan to take and paying back what you plan to pay back to the future revenues, to your future customers. Now, if you're the sort of person where you sell a lot of stuff, you don't really keep track of things, you're not really sure if you're in this situation, you still need to take step number 1, because it's going to tell you if you are in fact in this situation or not. Once you know that, then you'll know if you'll take step 2 and 3. If this is an interesting concept to you and you want to dig deeper, feel free to email us, give us a call, leave a comment. Our carrier pigeons are on vacation right now, so, don't do that. But get in touch with us. We can help. So as always, I really hope this is not one of the 50 rules of bookkeeping that you've learned too late. If this has been helpful to you, or you know someone that needs to hear it, hit the subscribe button, hit the bell for notifications, send it to a buddy. No one wants to be in this situation, and if you are in this situation, you're going to need some help getting out of it. In the meantime, check out our other videos. Head over to our website. We have articles and ebooks that should be helpful to any construction entrepreneur, and we'll see you next time.